Hi traders, it's Matt Simpson here from Forex.com, and today we're looking at the Australian dollar alongside futures and options sentiment and some of the Aussie dollar crosses, but first taking a quick look at the economic calendar. There's quite a few events next week, the main one being Australian Q1 inflation report on Wednesday. It seems likely we'll see inflation remain above the RBA's 2 to 3% target band for a second consecutive quarter and even rise further from 3.4%, and that could boost odds of another RBA hike, which currently sit around 69% according to the RBA cash rate futures for May the 5th. Now, the cash rate curve also implies a peak rate of around 4.7% by January, but this could rise further should we get a hot CPI print. The Fed aren't expected to change their interest rate, but they may deliver a more hawkish tone due to the ongoing geopolitical tensions in the Middle East. Note that the US data number on Thursday includes GDP, PC inflation, as well as jobs claims. It'll be interesting to see how much of the inflation spike from the recent CPI report makes its way over to the less volatile PCE price index. And we could also see prices paid accelerate further in Friday's ISM manufacturing report, given the ongoing issues with the Strait of Hormuz. So starting the Aussie dollar chart, we've got the weekly on the left and the daily on the right. Notice that implied volatility has pulled back from those highs, probably near its average range over the past year or so, but it is starting to curl higher. Now the trend is clearly bullish overall, but after a 3-week rally, it has paused around that 2023 high, and it's got this narrow retracement underway. Now on the daily chart, it is potentially forming a bull flag here, and areas for support that bulls could be seeking here is for movement down towards the 20-day average or the weekly VPOC just above or around 71 cents. Now, I'm not guaranteeing it's going to get that far, but given the strength of this trend, I think dips are favoured while prices remain above this swing low. But the fact that it's withheld the US dollar strength so well, I think we could be looking out for a potential swing low next week, particularly if Australian inflation comes in hot. Also notice the risk reversals here have been gently moving low, which basically means that the put demand has been rising relative to calls. But again, we've seen quite a rise from those cycle lows alongside price, and I think it's really just suggesting that this is more of a retracement lower than a big turnaround. So ultimately, I'm looking for dips from here for the Aussie dollar. As for Aussie dollar CAD, it's pulled back to this interesting level around the 2021 high. Now, I do think that it still looks a little bit overextended and could do with a bit of a pullback. So depending on one's time frame, traders could be looking for a break beneath this area here. And if that turns into resistance, maybe a cheeky reversal strategy could come into play. But ultimately, like the Aussie dollar, I'm really just looking for dips. And one area to look for is maybe a hold above these swing lows here for the next leg higher. Aussie yen looks extended. Now, we can't really fault this trend. It's been a fantastic bullish trend since that April low. It's been the best performing currency over the past year. But of course, like the Aussie dollar as well, we've had this strong rebound and volatility is low. We're heading into the weekend now, and it's on track for this spinning top doji beneath this last week's high. So that itself could trigger some sort of a reversal signal on the weekly time frame. When you look at the daily chart as well, it's telling a little bit of a story here. You've got this bearish engulfing candle, though it is very small. The biggest takeaway here is that volatility is very low at the cycle highs. So that increases the odds of volatility rising as we get into next week. There's certainly a lot of data for it. And I think given that it's failed so far to break above this high, the longer that goes on, I think the greater the chance it is of a bit of a pullback. But again, doesn't mean a trader has to go against the trend. It is a very strong trend. Bulls could simply seek for areas of support to hold for dips to come in, and such areas such as 130 handle, the 20-day average around 112.78. Ultimately, the trend remains bullish on the daily time frame whilst it remains above this swing low. Unless we get a risk-off trigger, I don't think it's going to be going that low. Ultimately, bulls could just simply wait for a break above these cycle highs. As for pound against the Aussie, this is in an established downtrend and it's trying to roll over once again. We've got 3 consecutive bearish weeks. But on the daily time frame, we've got this consolidation at these lows. It does look like it wants to break above that May 2024 high over the near term. But again, for me, given the dominant trend to the downside, I think rallies are going to be favourable for bears. It's just a case of looking for maybe next week, can we get evidence of a swing high within this week's range? And then looking for repositioning to a retest a potential break beneath this low, with the next downside target being the 2020 or the May 2024 low at 185.88. Now, while there's lots of similarities between Euro Aussie and Pound Aussie, there's also differences as well. And Euro Aussie hasn't actually travelled as far back towards that low, and at the time of the video at least, it's trying to hold above these swing highs. So I think there is potential, whilst it holds beneath these 2 daily lows, that we could have the chance of a bounce going into next week. But again, potential for a hawkish RBA, hot inflation prints coming in. But ultimately, I think we'll be looking for a break beneath these lows, a retest and break beneath 161 as it heads towards 160 in the coming weeks. So we'll finish up on Aussie Kiwi, it'd be rude not to. And again, we've got this lovely strong uptrend, very similar to Aussie Yen. Although what I don't like about this is that we've got this potential rising wedge pattern, which is sometimes a bearish reversal. They're not the easiest ones to trade, but we could, for example, assume a break of this swing low confirms the pattern, which brings a target around 1.95. But again, just because you see reversal pattern doesn't mean one has to trade it. They could just be used as a warning signal for bulls. So maybe if you are bullish on this currency pair, it would be an opportunity to look for a pullback and seek evidence of a swing low with a view to rejoining that bullish trend. As always, hope that is useful and wish you best of luck with your trading.